Are higher interest rates still boosting European bank profits?
Yes, I guess so. To some extent, yes, especially from America, because they're coming from a very different place, because that's what the economy is stronger. So in a sense, that's so higher interest rate will boost the banks. They're more diversified, they're more international. Like, for example, the big three today, Deutsche, Barclays, and BNP, because they're all large wholesale bank, and so with a relatively good footprint in corporate finance and to some extent also to America. So they will benefit from this next leg in higher rates.
Tell me this then, Deutsche expected to disclose a 15th consecutive quarter of profit after years of hefty losses. What else should we be watching from Deutsche specifically today?
Yeah, Deutsche Bank is always about the cost base. The management has done a good job in keeping in feeding the beast and reducing the cost base. I think in comparison to the other, Deutsche is more focused on retail banking and of course also investment banking. So I guess that's an announcement like the BHP Anglo potential tied up. It's positive because they trying to increase the market share in M&A and in equity capital market. So they were behind some of landmark IPOs recently. So I guess that's what this is the focus of Deutsche at the moment, because on the commercial side, I think also probably in Europe we've seen the peak in terms of net interest income.
And just with regards to some of the trends we're seeing sector-wide, falling margins, weak loan growth, these are key concerns, are they not?
Yeah, they're a key concern, but to some extent in Europe, so ever since the global financial crisis, the anemic loan growth has been really the topic du jour. So I think also it's nothing really changing on that side. On the other side, I think also all those lenders, they've been doing what, for example, Citigroup is doing now in America. So overhauling the operation, reducing the footprint, and just having a better grasp of cost cutting. European banking has been about cost control over the last year. Now, of course, also versus the past, rates are still higher, even if the ECB repo rate goes down to a terminal rate of 3%. I think also those are at healthy level for the European banks.
So that's the question. How sustainable is this sector-wide rise in net interest margins, particularly if we see the ECB cutting rates in the second half?
Yeah, probably. I think it's we're off the peak in terms of net interest income, but at the same time, so we have to think that 5-7 years ago, rates were at zero. So from a banking perspective, it was very difficult actually to make any money in terms of lending to both the households and the corporation. Now I think also even these potentially 3% terminal rates between now and a year from now, then I think also is still relatively important. What I think will be important for the market from now on will be, and I think also the market will reward the more diversified business model. Banks, there are both the banking income, at the same time there are the fees and commission. That's investment banking, asset management, custodian service, and so on and so forth. And I think not all the banks also can grow the, say, the fees income.